The markets have closed, and it's time for us to take a look at the markets this week. In our market analysis segment, we're joined by Samuel Gichohi, who is a Senior Business Development Manager at NIC Securities. Many thanks, Sam, for joining us.
Thanks for having me.
Well, it's quite an ironical time for the markets. We are seeing the market continues to edge downwards. The NSE 20 this week, we've seen it's at 2,820 points, down by about 0.18%. What's happening with the markets? Is there a bear run or not?
Well, I think we are at or near the bottom. Reason being, one, bottoms usually happen either close to the last bottom, and if you look at where the NSE 20 is right now, and you look at the NSE 20 in January last year, that's roughly exactly where we were. Now the issue is what caused the whole, climb and the dip.
Yeah.
So the climb usually happens in an election year. We tend to see, especially the really high net investors buying because they know after elections the market is likely to jump. After the election nullification, we did now see the market again dip. And then after that, because of all the trade wars happening,
globally,
yes, foreigners take
Trump
up about
versus
60–70% of our market.
Yeah.
And so it means if foreigners are selling, and then anytime, say the US, they increase their interest rates, there'll be flight of capital again back to their markets. So we've seen a consistent 9 to 10 months of foreigners selling off. Now the local 30% is not able to sustain that. So that usually precipitates a bear run.
All right.
And what has happened is a bear run is when a market goes down by at least 20%. So the market has dipped. Now the question is, at what point do we start expecting it to pick up? We've started to see foreigners coming back on both the buy and the sell. For a while it was just foreigners selling. Then now we are starting to see them, for example, Safaricom today was almost equally bought and sold by foreigners. And that immediately tells you that an interest has started to develop.
Great point.
Because these stocks are now undervalued. They're highly discounted.
Yes.
So it means that's a signal to start taking positions now, because if now the market turns, what happens is you're buying it at a very well discounted. Of course, you can buy any dips a little more, buy more, average down.
So you advise take position? And
I would take positions, particularly I think Safaricom, the usual suspects. You don't even need now to go for the, start looking around, because usually we are not in a seller's market, we are in a buyer's market.
Yeah.
Now is the time to buy.
When
so
you're saying
the
time
field
to buy,
is wide open.
All right.
It's wide open.
The nets must be cast wider, of course. Looking at Kenocobil, the acquisition is going on so well so far. But really, among the top gainers for this week, we are seeing one surprise is that we have actually Unga Group. And of course, we've been seeing what's been happening in the news when it comes to maize prices. And of course, the NCPB issues. Perhaps what could be happening with the agricultural stock, especially now that we brought up Unga Group?
Well, I think Unga, for one, would not probably fall within that agricultural per se.
Yeah.
Reason being, in as much as they have the milling side of things, they do also have a lot of the importation part of the, for example, wheat and all that.
You're right.
So they probably, you'd see most of that activity being, because maybe somebody thinks either it is discounted or there was at some point Seaboard wanted to do an acquisition, which we still don't have much information. So you could find that maybe people are taking position on that. And if you look at Kenocobil, I think some of the activity we are seeing there again is because somebody has said they would like, or they're thinking of acquiring it. Yeah. So again, sometimes interest comes because of information that is coming from, from outside of the usual fundamental issue. However, you're still seeing that much smaller companies are on the top gainers and losers, but on the end of the volumes, the amount of shares being traded on the market, you find Safaricom, for example, the volumes have started to pick up. KCB, the volumes have started to pick up. So you're going to see those equity volumes are picking up. I think Centum, you probably see it again in that list. So now you're seeing investors looking, what is at a highly devalued price from the peak. You see, KCB was trading at what, 55 at some point, and now we are talking about 38.50. So that's a nice percentage drop to tell me, oh, this one looks like a plum pick. And I pick it up.
We've talked a lot about Kenol Kobil. They've moved about 3.3 million shares today. And one big question many people could be asking is, what strategic advantage does the petroleum company have with this takeover bid, as you juxtapose it with the likes of Total, which is also listed? Will it turn their fortunes around? Well,
I think Kenol Kobil has performed quite well in the recent past.
Yes.
And I think they managed to bring down their costs. And so it means if you bring down the cost of business, and they were able to become a more efficient company. I remember there's a point where they even, sort of cleaned up, on the staff and stuff. So that is bringing down the cost of doing business, and of course being one of the biggest downstream distributors of fuel. So they are in a good position. However, right now I think it's mostly speculation that somebody wants to buy.
Speculation, you say? Well, it's a question of time.
It is. True.
All right. Well, Sam, thanks so much for your very deep insights. Let's now take a look at Markets 101 for this week. Well, it's now time for my favorite segment, and that is Question on the Street. Let's listen in on this week's question, Sam.
My name is Harun Madena from Kilifi County. I would like to know, what is dividend drought?
Thank you for the question. Dividend drought. What is a dividend drought? A dividend drought is a period in which listed companies do not pay dividends for a reason or the other. For example, if an economy is in a very high growth section, and companies need to retain their earnings so that they can grow. So assuming a company is in an expansion stage, and they need to use the profits they are making as retentions so that they can go on expanding using those funds, there will be a dividend drought. Of course, sometimes the company is just not being profitable, and they don't pay dividends for a period of time.
All right. Thank you so much. Very well answered. And of course, that takes us to our next segment, that is Historical Fact for this week. Well, that brings us to the end of this week's edition of the Trading Bell. We do appreciate your feedback. Remember, you can always engage with us on our social media handles appearing at the bottom end of your screen. You can also tweet me at Agina Abi, and we'll be able to sample your views in our upcoming shows. And of course, it has been a high energy show hosting Richard Quest, one quite difficult interview I had there. But of course, as he always says, whatever you're up to, I hope it is profitable. Well, let's do this same time next week here on the Trading Bell on KT News.